What's going on, guys? It's Kyle. Welcome to the Stocko YouTube channel. In today's video, we're going to be covering the PaySafe stock. PaySafe is a very undervalued growth stock in the stock market right now. It's beginning to pick up more headlines once again heading into this new earnings report. We have Motley Fool putting out articles, CNBC analysts recommending it. This is an amazing play right now, and we're going to be going over why I believe PaySafe is undervalued in this stock market. And only if you feel this video gives you a better insight on the PaySafe stock. Be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks and spec plays. There's gonna be a lot of great information coming out. You don't want to miss it. Let's get into the video. So looking at just so looking at so just looking at So looking at the closing performance on August 6th, Friday, PaySafe had a 5.5% gain. Very solid when you take a look at that NASDAQ selling off almost 0.40%. Guys, PaySafe, I've been recommending it for a while. This has been a 6-month sell-off, since that inflation headline came out back in February. Non-stop selling. And you can see right here, this stock actually hit a high of 1950, pulled back all the way to the low 10s. I can tell you, my average right now is in the 12s. I might average down, if some other plays, run up a little and I can take some profits, maybe get my average down to 11. But guys, in my opinion, anything in the 10, 11, 12 range is an amazing buying point for PaySafe because of its upside potential in that iGaming market, also being undervalued right now when we take a look at the price to sales multiple compared to other growth stocks in the market. Motley Fool just put out an article. This growth stock is riding the online gambling boom. So I can tell you right now, I watch Motley Fool daily, and I've seen them talk about maybe 5 to 10 SPAC stocks at max. So if they're talking about a SPAC stock, it's pretty much, the cream of the crop if it makes it onto Motley Fool. You can see right here for 2020 and 2021, we're talking over 600 SPAC stocks going public. Tiny companies, average IPO size in the $300 million range. Guys, the SPAC stock market was oversaturated. A lot of companies just went public for a cash out. A lot of and it's very rare to find a SPAC stock that could have potentially gone the IPO route. And I believe right now PaySafe is definitely in that top 10 out of that 600 for sure. This payments company serves the global iGaming industry and it's bringing its expertise to the US. PaySafe is the leader in America's growing iGaming industry. It has existing deals with the biggest online gambling providers in the world. It also facilitates online gaming payments for Microsoft's Xbox platform. PaySafe is the parent company of Skrill digital wallet provider and NetTeller, which it used to facilitate payments between consumers and merchants. Through these two brands, the company is the global payments leader in what's becoming known as the iGaming industry, serving online casinos, sports books, and even the emerging esports craze. It has brand new partnerships with sports betting companies in the US, and the segment is growing rapidly. Gambling is a controversial industry, and historically, the US has been hesitant to loosen restrictions on its practice, but the tide appears to be turning, with 22 states now legalizing sports betting at in person venues, and 14 of those allowing consumers to participate online. It's expected to grow at a 17.3% compound annual growth rate in 2026. So guys, I just did a video on growth stocks. In my opinion, anything, in the range of 20 to 60% is some of the highest performing growth stocks in the world. So a PaySafe could potentially maintain, a 17.3% compound growth rate, in that iGaming sector. Guys, this stock at the price range right now is significantly undervalued when we take a look at other growth stocks. So we're going to look at some of their financial highlights. And guys, I've looked at their last earnings report multiple times. It was decent, okay? It was not any kind of stellar growth at all. But I'm telling you, the company had, business channels that had exited back in 2020, 2 quarters ago. And they said that they're going to lap these issues on their earnings call, later on in this year. And they could see growth in the high teens, for the company's performance. And as you can see right here, the good news is, they saw, revenue growth. It was low, only 5%, but I'm telling you, this could be ramped up very fast. All we need is a 15x growth rate on this stock. In the next earnings report, that will be amazing. And here's the business segment that they are really focusing on. That is the e-cash revenue. Q1 2020 was 69 million. Q1 2021 was 112 million. 63% growth rate in that segment. So as you can see right here on their website, the reason why growth was overall only 5% was because of those business channel exits that they had to make to really focus in and invest the company into that iGaming sector. As you can see, the integrated processing, had a 5% decline. The digital wallets had a 13% decline. And then the eCash solutions just pretty much lapped everything and still put the company in a growth, quarter of 5% overall because it had 63% growth rate. So this segment is the segment that they are really focusing on right now. Only 69 million, but I'm telling you, this is gonna, eventually surpass the digital wallet and integrated processing. Speaking of the eCash segment, PaySafe just made a big acquisition. They plan to acquire a company called Pago Efectivo. This is a Latin America company focused in Peru. It is a market leader in Latin America in the provision of e-cash and online banking payments that allow merchants to offer alternative payment methods at the checkout. As part of the deal, the Pago Efectivo team, including CEO Juan Fernando, will join PaySafe and become part of the company's growing global e-cash and online banking solutions team. I am thrilled that we are announcing this acquisition. The APM market in Latin America is a thriving one, and Pago Efectivo is a market leader in e-cash and online banking solutions, and the team also brings deep banking relationships and 140,000 distributor partnerships across Peru and Ecuador. So guys, as you can see, this is where all the money is going, straight to that e-cash segment, the highest growing segment in PaySafe's, 3 segments right now. Why you should own it. If we scroll down just a little bit, with a 7.8 billion market cap at recent prices, PaySafe trades at just 5 times projected 2021 sales, and analysts also expect the company will deliver a profit of 6 cents per share. Guys, this company is literally trading at 5x sales on top of being profitable this year. Where can you find that in this market right now, guys? All the growth stocks, are literally trading at 30, 40, 50, 60, 70, 80x. I mean, literally, the cheapest out there is like 30x multiples. So, guys, imagine if this company can literally get up to a 15x multiple. Still significantly undervalued to other growth stocks. But guys, that would be a triple on your money. This could happen in the next 12 months. A triple is possible. This CNBC analyst, Steve Grasso, has been recommending this company just like me for the past 6 months, since like $15. And the stock has not had good performance, came back down from 15 all the way to 10. And he just recommended it again. He said, I'm quadrupling down on this company. I'm telling you, this is, the future of the gambling industry, and PaySafe is the leader in iGaming. So guys, he has been quoting a price target on this stock of $45. I'm going to give you my personal price target. It's a little bit lower as far as multiples, but guys, yes, this CNBC analyst has been recommending the stock for a $45 price target for 6 months. When we look at the highest performing growth stocks in the world, we're talking 20 to 80% growth, more or less like 60% growth. Snowflake is one of those rare ones growing at like an 80% rate. And you want to use that price to sales valuation that we just saw in that Motley Fool article where they came up with that 5x market cap divided by 2021 revenue. Forget the 2020 revenue. That's called, trailing. And forget the 2022 revenue. We want current valuation right now. None of that forward sales or backward sales nonsense. Snowflake 80x, Cloudflare 76, Shopify 50, Datadog 61, The Trade Desk 45, Lemonade 40, Snapchat 34, Zoom 36, Okta 35, Twilio 26. So guys, you got to be very cautious on what companies you are buying inside of this market right now. You may really love a company. You may really want to own a piece of the pie in that company, but if the valuation does not make sense, you can't put yourself at risk of buying that company at these kind of price ranges. I mean, out of all of these companies, I would recommend like, maybe Zoom and Snapchat, and those are still trading at 34x. As you can see now, why I continuously make SoFi stock videos, it's trading at a 13x multiple and is growing faster than all of these companies right here. So SoFi actually has 3x opportunity right now at the price range is trading at, when people really see how fast this company is growing as a public company. So PaySafe, is trading at a 5x. We don't need a 30, 40, 50x. We don't need that because the growth rate is much slower. We just had a 5%, growth quarter. All we need is a 15% growth quarter, and this company will easily be valued at a 15x multiple. We're not going to be at that $45 price target like Steve Grasso, but when we enter the outstanding shares at 723 million, market cap is right around 8 billion right now, so we would have to get up to a 24 billion market cap. This is going to give us a price target of $33 if they can ramp up that growth like they said in the earnings call, to that high teens, the next 2-3 quarters. This stock could easily pull a triple, guys. I'm telling you right now. I would love to double down if I have some other companies that I can, take some profits on and double down at that 10, 11 range for PaySafe right now before earnings. And guys, just take a look, states that offer legal online gambling, there's so much potential in this market. And, PaySafe is making crazy, crazy, acquisitions outside of the US. They're teaming up with companies inside of the US like Twitch, Fortnite, DraftKings, multiple companies. And we take a look at their operating leverage, they have growth at scale. You can see their organic adjusted EBITDA is projected in 2021 to hit, 500 million dollars, guys, and heading to 600 million 2022, near 700 million in 2023, and this could easily hit $1 billion in EBITDA yearly if that sports betting segment explodes and all the states, become, legalized. So you're talking massive EBITDA. When you look at 90% of these other SPAC stocks, 90% of them aren't even EBITDA positive yet. We're talking, close to $500 million already in EBITDA profits yearly. This company is expected to turn a profit this year around 6 cents. So there you have it, guys. PaySafe is trading at a 5x multiple. The last earnings report was decent, but if this company really picks up on the earnings report, you're going to see more investors double down. You can go on to Fintel, guys. There's big money billionaires buying this stock right around that 10, 11, 12 range. This is the time to be buying. I think this stock should easily trade at a 15x multiple if we see the growth rate really pick up a little bit more in the next 2 quarters. A little bit lower than the CNBC analyst of $45, but I believe this stock is going to be, mid 30s potentially, leading into next year. And only if you feel this video gave you a better insight on the PaySafe stock, be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks and spec plays. There's going to be a lot of great information coming out. You don't want to miss it. Be sure to leave me a comment, and I would love to reply to any comment or question you have. Once again, my name's Kyle, and I hope you have a great day.